Okay, guys, trade with Crazy version 10.4 review of the 5% rule. Now, 5% rule actually is available only for the PTP student, okay? And because we're going to have a PTP class very soon, yes, indeed, we're going to conduct one PTP class in the near term in preparation for the WTT this challenge, all right? We kind of can be confident that if you actually really use the system itself and trade for 3 months or so, to be able to hit the top 100, I think is very, very possible. And I'm more than happy to really support the team who's going for this competition by giving you the extension of the indicators to use, giving you feel of the market, and then give you directives and the thing. So I guess going to help you guys to make money so that you guys can win the competition. Now, of course, the major prize, the first prize is 1 million US dollar. That's going to be a lot of money, but it will take a long time to reach there. It's 3 months, I think, the competition. So if you can have the tenacity and endurance to do that, why not, right? Okay. So, but because it's going to be a 5% rule, I'm going to show you the futures market stuff. So please understand this disclaimer apply as usual. Yeah. Okay, let's go. Okay, so let's just talk about the 5% rule first. What is this 5% rule all about? Now, basically, the concept is simple. When the market actually reaches a all-time high, definitely hit all-time high, this is whereby we have this thing called trending market. If the market basically stays above and maintain above the higher side, it will still continue to trend higher. But if there's going to be a pullback of more than 20%, then it'll become a bear market. So give you an example, right? So if the market is going up, going up, going up, and at this junction here, the highest point, if it pulls back more than 20%, then the market will turn into a bear market. Yes. Then if the market can recover above the 20%, then it may be able to continue its run and then go higher again. And that basically tells you a very clear indication that the market, in the long term, is always buying. All right, it's always buying. Okay, so now let's take a look at the 5% rule one more time on this point here. This is the Dow Jones. So you can see that the Dow Jones highest point back then was 45,140.3. So the 5% rule, the first number was 42,883. And once the market failed to stay up, the market pulls all the way down, and this time around it breaks over there. Now the thing is this: if you do a simple calculation here, a very simple calculation, follow me, yeah. Okay, you see there. Here's one box, then there's 2 box, then this is 3 box, 4 box, 5 box, right? So you can see that if you look at together, okay, and you divide by 2, you get the midpoint somewhere around here. And it's crazy, but it's true that the market really stopped exactly where the 50% marker was. Interesting, huh? Very interesting. So you take this number, 42,883 plus 40,626, then you divide by 2, you get somewhere around there itself. And that's how the 5% work. Okay. So now the thing is this: if the market continue to recover, okay, if the market do recover, you cross back the 5% mark. And of course, you go back to the 5% of the between the 100% and the 95%. And you can see again, the market really take it rather seriously. Okay, got the idea now? Okay, yeah? Pretty cool, right? Okay. Oh, yeah. Okay, so with that concept right now, we just continue for this thing here. So the market breaks below the 95. So again, same thing, it should go down to here, right? So the market will go down to the midpoint, that's 97, that's 94, 92.5. And then after that, if you notice this, the market goes down. Wow, it misses the 90% just by a whisker. And after when it rebounded itself, you go through the same gate and then go very near to the 95. And when 95 failed to stay, it goes back down. And this time around, you can see the closing price was below the 90%. So you can safely say that the first target it will be the midpoint between the 85 and the 90%, which the market really went there rather easily. Yeah. Okay. All right. Okay, then you notice the way it closed down on the single day market slowed down, right? You notice the market really came down to the 85%. Yeah. And then what happened? The market continued to fall. So by default, it should be able to go to the 80th percent, right? The bear territory. But then if you remember what I tell you, right, just put a halfway marker between the 85 to 80, you can see why the market got itself supported recently somewhere around here. Okay. So you can see that from here itself, there's actually a somewhat called a sure win trade, whereby the market breaks the big number. If break 85, you go to 82.5. If break the 90, you go to 87.5, the very sure hit level. So if the market can stay above 85, then by right, you go to the 87.5 and so forth. Got an idea now? Okay. So now everybody do me a favor, take our calculator out. Everyone take our calculator out, okay? And we do the math together again. So now this number here, I want to do a live right now, is 42,883, right? Okay. This number here itself, everybody take a look, is 40,626. Okay, so take these two numbers now, everybody. 42,883 plus 40,626. Add together, divide by 2. What number do you get? Key in now, and I tell you the secret here itself. All right, remember, this is live sharing. There's no way I can play around it. It's all live sharing right now. I want to do a number right now. Okay, what number do I get? 41,754.5. Okay, the 0.5 itself, we don't need to put it. We just put a whole number. Okay, so everybody watch. The number that you said is 41,754, right? So that's the number that y'all actually tell me. Now watch these guys. Watch. I press OK. Bang. Oh my goodness. Do you understand how it works right now? Look at the high 2 days ago. Look at the high 2 days ago. Okay, I push it out. Okay, look at the high. The high of the day was 41,776. All right, that is basically the market tapped the number and then pull back immediately. This morning, the opening price. What is opening price? Yes, the opening price is 41,773. Gosh, it's as if that the market knows this number. This is why I say PTP, this particular subject, this particular syllabus is really good to do if you try it. And if doing that itself, you can roughly do some calculation of the market. So now, very simple. Everybody just take down this number live and listen to me. This is going to be a sure win trade if you follow me properly now. Is that if the market can stay above 41,754, if you can stay above, yeah, the Dow will likely be able to see 42,883. But because recently we always noticed that when the market go very near the big number, it just missed the high by a little bit. So maybe you should be considering to take profit about 42,800 level. Yeah, okay, at least somewhere there. So you see now it's 41,754, right? So if it goes up, that means we're talking about a potential 1,000 point upside. 1,000 point. So of course, if the China deal really come out well, then 1,000 point is nothing. 1,000 point will be nothing. Yeah, it will be able to fulfill. But the vice versa part is this: if the market fail, then chalat, the market will come back down to here, and that will be 40,626. So which means that if I now sell the Dow Jones and I hold it all the way, my first target will be 40,626. Okay, all clear? If all clear, press number 5 right now. So with this number in mind, everybody now do me a favor. Let's draw the second number. Let's say hypothetically the market really collapsed. Okay, we have 40,626 here, right? Pardon my drawing, freehand, yeah? This number here is 38,369. So do me a favor, get me the between number. 40,626 plus 38,369 divide by 2. Get me the number right now. So today we already devised where the Dow will be going in the near term for this week or this month. Okay, what's the number? Waiting for you. And the number is 39,497. Thank you. 39,497, right? All right. So that is your number. So you look carefully yourself that when the Dow breaks below this number, it smashed right down to here. When the markets go above this number, it goes up to here. When it closes below this number, it goes down to here. When it goes above this number, it goes up to here. Can you see? Very nice, right? It's like doing this itself, you almost can get a sure win trade of 500 points each time. Yes, that's why I want to share this with you. And I saw this, and I think this is really amazing, especially this range itself between 90 and 85%. Yeah. So guys, if the market do fall, we're going to see this number at 39,497. Okay, all clear? Pretty cool, eh? Okay, if clear, press number 6 right now. Okay, because we're going to do the next thing already, eh? Okay, now let us go right now. Let me take a picture first for myself. Yeah, of course, I mean, even though I create this, I also can't remember everything, right? Okay. All right, so let's just do it gold, and then you understand why this is so powerful. Let's bring in gold right now. Okay, guys, take a look. Okay, so I already drawn this for you the last time already. So gold highest point is 35.00. The 95% mark is 33.25. So that's why the middle ground is 31.50, right? So you do yourself a favor. You take 3325 plus 3150, then divide by 2. 3325 plus 3150 divided by 2. What number do you get? Just to verify this. Okay, just to verify this. 3325 plus 3150 divided by 2, you get 3237, right? 3237, right? Okay, so this number is a bit off, yeah? Okay, the number is 3237. Okay, all right. Okay, so you see, look at gold. When the gold came down and closed below the 95, it came down exactly here. But because it couldn't stay below the line, it didn't close below the line. Notice that it didn't close below the line. It rebounded and it went back to here. So it's very clear. So if this is 3325 and the highest point is 3500, do yourself a favor. 3325 plus 3500 divided by 2. 3325 plus 3500, then divide by 2. What number do you get? Do me a favor. Let me know. Now, by doing this itself, right, you will roughly have a big idea of how to make the massive gain in the market. But the conditioning is very simple. The closing price must be involved. That means that the market has to close below a technical line, then you go to the next one. During the day, if it bounce around it, right, it's not that good. So it's your call to make it perfect, yeah? Okay, so 3412, right? Okay, 3412 is a calculated number. We press OK, and then here we go. Whoa, my goodness gracious. Look at it. This market, although this point, it closed above the number, but the next day, it pulls back. And look at the high of the third day. Oh, my goodness. This is crazy, guys. I mean, serious. No joke. So now, if gold is to continue its movement, then gold will have to come down to where? You got it right. Gold have to come down to this number at 3237. So if gold really has to come down, gold will have to go down all the way to 3237. Got it? So that is the number that we can see at the moment. Okay? So that's how we play this number. All right. So guys, remember this. What I'm trying to do is help you guys to give you a good feel of gold, what you can do. So of course, you say, KL, if the gold can recover back to 3235, Does it mean that you go back to here again? Of course, yeah. The closing price of 3325 is important. If gold can close above 3325, then yes, it will go to back to the 3412 level. I know you'll say that, Shafiq. 3228.5. Okay. Okay. Any number that works for you. All right. Anyway, my job is to give you a heads up. So the risk management, just do a mathematics here. So just put a self risk management, right? Where's your entry, stop loss for how much, then target how much. Then from there itself, you can give a rough idea. Okay, I risk $5 for $20 profit, or risk $10 for $4 profit. You can do all this mathematics just for yourself. Okay. I really hope that you guys like this session. It's something that I share. And if you cannot remember all these numbers, don't worry. When the video is out, it's all right. Take a screenshot and use it for yourself. All right, guys, that will be all for today's sharing. I hope you like this video. All right, thank you very much, and I'll see you on Telegram. Okay, bye-bye.